The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
So it's a pretty dire day on market on this Friday with very few places to hide, but that often brings about opportunity. So today I chose Zipco for the stock of the day. Why Zip? Well, it's down about 3% around the noon hour at least. Year to date, so since the start of 2025, it's down around 30%. It comes as its rival Klarna is perhaps just days away from filing for its $1 billion IPO with hopes to raise at least $1 billion, so a pretty formidable competitor there. Now, Zip, as you know, was one of the comeback kids of last year, and I happen to know it was one of Junbei's stock picks heading into the year.
Question without notice.
That's right. Does the investment thesis still hold, or is it an even better buy today?
Oh, look, absolutely. So Zip still have very strong sort of growth. And then the update they had early this year, including the result, is that its US business still growing over 40%. Incredible amount of growth. And domestic business is becoming more profitable as they focus on profitability. And then the newer market newer space they go into, is showing very, very, positive green shoots and signs. So, the business hasn't changed. What's really changed is essentially, all these companies done incredibly well. The tech businesses, the financial businesses in the last 12 months has now been sold off. If you look at Block, it's down 40% since high, and incredibly cheap as well. So it's just that market sentiment is a bit worried about the expensive part of market. For us, this is still really great buy. I think give you that really great exposure of what is to come, and then one of the very rare high growth companies that still that is in our markets.
So do you go for the high growth right now when things are looking a little wobbly, even with the US consumer potentially now?
Yeah, you're right. I think the consumer is definitely still good, but I still think it's getting a little bit more brittle. Thank you for reminding me on that one. No, what I think, obviously, after the reporting season for Zip, I think some of the negatives were that obviously their cash margin had increased a little bit. The bad debt provisions needed to be expanded, so we've got to be a little bit careful there, as well as their capex. They spent a little bit more than what the market expected. But the consensus was in line with expectations, and the momentum, as Junbei said, in the US is exactly where you want to be. You want to be owning these businesses when interest rates are falling, not when they're rising, and this is the right time. I've been doing a lot of work on MoneyMe, all of these not payday lenders, but these other lenders that are out there.
Non-bank lenders, yeah.
Yeah, the non-bank lenders. And they still haven't recovered, but it's probably the right time to be looking at that sector and looking into that as well. I mean, I've always loved Zip. I own it still at ridiculously high prices, and I've bought every time that they've done a share purchase plan on the way down. I'm happy to stay with a buy on it also.
Thank you. We've got a double buy to start this session as we have the ASX pretty near 6-month lows. That's the stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.